The stock market is going absolutely insane right now, and I can't figure out what is wrong with investors. Google stock is down damn near 10% today alone, and I'm going to explain to you the exact reasons why Google is crashing and why it's likely a buying opportunity of a lifetime compared to the other mega tech companies that are starting to post earnings like Microsoft that jumped up 5% after hours, but the whole market is pulling back. Investors don't care that these earnings were good. Even, Microsoft is having a hard time keeping these gains. So we're going to break down these earnings, and then we also have to point out what is going on in Canada as they recently just paused yet again their interest rate cycle, which is usually reminiscent to what the US is going to do as Canada posts these numbers usually first. So this is very intriguing and I can't wait to get into this. So consider hitting that like button, because taking a look at this charts today, folks, this is insane. Look at Google. It's down 9%. We're talking about a 1.7 something trillion dollar market cap company. We're talking about 170 billion almost wiped off their market cap just today alone. Nvidia is tanking. Meta is tanking. Look, Microsoft's only up 2.5% now. Can barely hold those gains. Palantir, it doesn't matter what you're looking at today. The market says we don't want this. We don't want anything to do with this, and I don't know why. This has got to be one of the most resilient earnings that investors have ever anticipated, since the interest rate cycle began at the beginning of 2022. Like, these earnings were far better than anything anybody could have hoped, from the dividend stocks with Coca-Cola and Verizon to now the mega cap companies like Microsoft and Alphabet. We are truly getting to the other side of this recessionary environment from an earnings standpoint, and I'm going to show you what I mean by that. And I don't know why investors are selling off, which could only present to me as a buying opportunity, right? So let's take a look at Google here. Now, Google is down dramatically. Again, now their market cap is 1.6 trillion, but again, a 25 price to earnings multiple pretty much puts it in line as the cheapest S&P top 10 company as it pretty much stands in this moment. And just taking a look at their revenues, going from 69 billion to 76 billion, an 11% increase year over year. I mean, you take a look at their diluted EPS. It's going from $1.06 to $1.55. Let's zoom that out and see what it looks like on a quarter over quarter basis. So from the earnings per share, last quarter, it was about $1.35, but they've been increasing and going back into positive territory ever since the crash started taking place again at that first quarter of 2022. So it looks like we're starting to hit record EPS. I mean, their last record EPS was $1.54. And again, here we stand, folks, at $1.55. We are now at a new all-time high net bottom income for them of almost $20 billion. Again, look at revenue sitting at $76 billion. That is a record for them. I mean, that is a quarter over quarter pretty much record. They haven't hit this pretty much in their history, right? So again, I don't know why people are selling it off. So let's break down the fundamentals. Where are people seeing some weakening? What's the deal here? So Google's search and other, let's take a look. YouTube is growing. Their search is growing. Google Google network has declined slightly, right? But Google services, their advertising business growing dramatically. Look at cloud service here from 6.8 billion to 8.4 billion. Other bets are increasing. So what's wrong here? I can't see anything wrong here. Let's scroll down and read into this. As announced of April 20th, we brought together part of Google Research, the Brain team, and DeepMind to significantly accelerate our progress in artificial intelligence. The group called Google DeepMind is reported within Alphabet's unallocated corporate cost, prospectively beginning in the second quarter of 2023. Previously, the Brain team was included within Google Services, and we can see Google Services here with the breakdown of cloud, which actually saw a bit of a decline here by the looks of it. Other bets also declining a bit, but total income and operations have increased pretty much overall. And we're talking about a company that is probably one of the leaders in self-driving, by the way. I mean, they're the only company out there doing it right now, right? I mean, there's a lot going on with this AI stuff, but the cloud is what's killing people. I mean, read this. Alphabet stock is having its worst day in years after cloud revenue missed estimates. Do we really care about cloud right now? Like, I would gladly just own Google for the Google search and obviously, YouTube. I mean, YouTube is the premier streaming service. Forget Netflix, forget all this crap. YouTube is where it's at, where you get people like Mr. Beast, the new multi-billionaires that are coming out of the entertainment space, and it's only happening on YouTube. Ain't really happening anywhere else, right? So I don't get it. I can't wrap my head around it. Why are people being so dumb but selling off one of the cheapest S&P 10 companies on one of the best earnings reports they ever had? I don't know. Fugazi, markets make no sense. They can remain irrational longer than you can remain solvent. So what about Microsoft? Microsoft here, boom, up 3%, hit a peak of 5%, crashing now as well, pulling back on 56.5 billion in revenue, an increase of 13 damn percent. Operating income 25% increase to 26.9 billion. You know what I'm saying this is? Look at their earnings. 299 up 27%. Shall we do some comparables here? 299 is pretty much a record revenue or bottom line EPS for them, right? And also from a revenue standpoint. So the revenue was what? 56.5 billion. And take a look at the quarter over quarter. Again, that is a pretty much, well, it's a bit of a decline over last quarter by the looks of it, because their last quarter was sitting at about 56.18 billion. So it's a slight decline, but again, incomparable to pretty much quarter over quarter. This is huge for them. This is just ridiculous. So this looks like the true recovery of a soft landing from an earnings standpoint. I don't know how the rest of the economy is doing, but from a fundamental basis on mega cap companies, from all the earnings we've seen thus far, it's not that bad, folks. So I can't wrap my head around what is wrong with investors right now, but there is some good signs. Canada's market's going up a bit today. Canada here, taking a look at the interest rate cycle as they continue to pause, this could very likely be the end of this cycle. As Canada, there is a growing evidence that the past interest rate increases are dampening economic activity and relieving price pressures. Consumption has been subdued with softer demand for housing, durable goods, and many services. Weaker demand and higher borrowing costs are weighing on business investments. The surge in Canada's population is easing the labor market pressure in some sectors while adding to housing demand and consumption. In the labor market, recent job gains have been below labor force growth and job vacancies have continued to ease. However, the labor market remains on the tight side and wage pressures persist. Overall, a range of indicators suggest that the supply and demand in the economy are now approaching a balance. That is the headline right there you need to follow. So I highly doubt that, they're going to increase interest rates again. This could very likely be the end of the cycle, and next year it's likely we could potentially start seeing cuts as early. And this is just me speculating because they said they were going to leave them higher for longer, but that is just them trying to keep pressure on the market. And as we know, you can't trust a word they say, because during the pandemic, they said interest rates were going to stay low for the foreseeable future for a long time. You remember, they told us inflation was transitory. We don't got to worry about inflation. They don't know what they're doing. They never do. They only respond to the current actions at hand. And unfortunately, I believe in human nature. I don't know if that's an unfortunate thing, because I just know people are greedy. People want growth out of the economy, and that is going to be the job of the Canadian Bank and the Federal Reserve. So how do they do that? They lower interest rates. That means probably by Q1 to maybe into Q2 of next year, they probably have lied to us and said they're going to leave rates higher for longer, but they won't. They want to stimulate. They want to help the end user out, and they're going to drop those frigging rates. And how low they go, I don't know, but take a look at the sector heat maps today, and we'll just see how the market's responding to this, because in Canada, the only thing really rallying that's holding the market up seems to be oil and energy, which is up a little bit today. I mean, it bounced slightly over the last week, starting in, basically just today. I don't know if that's enough to make that kind of, green go across the board, because we're talking about a good percentage point pretty much with the big mega companies. But tech getting wrecked, Shopify's dying here, and the banks have still been slightly downtrending, with Royal Bank posting earnings on the 30th. Something to pay attention to. Consider subscribing for those updates. Shopify, if these tech companies had any vision into the future of what's happening for Shopify, it's going to be good earnings. Nothing to worry about there, but the stock will probably still go down nonetheless. And taking a look at the SP500, ooh, baby. This is like one of the worst days we've seen in a long time. I mean, look at the semiconductors. I mean, we're talking about everything's over 4% roughly in declines. Apple's down 1.5%. Software applications, heck, even Berkshire, a lot of these resilient mega caps just getting wrecked today. I mean, my God, there's nothing. I'm not even seeing Pfizer's up 1%. There's very few things that are even up 1% today, so it could lead to a good buying opportunity in the S&P 500. But if you do just enjoy these discussions, you want to continue them, join my chat group, baby. We're talking about this stuff every day, all day. You just got to go down to that Patreon membership and support me there, and you can join my WhatsApp group and continue these conversations. But I'd love to pass that question off to you. I'd love to know what you think about all of this in that comment section below.